Hi, I'm Pattu from FreeFinCal. SEBI has recently released a consultation paper about the introduction of a so-called new asset class, which they believe will have a risk and reward profile in between that of a mutual fund and that of a PMS. So they want investors who can invest 10 lakhs in one shot to be able to invest in this, and they believe that retail investors will not be able to invest in this, but there are many people who can invest 10 lakhs in one shot who call themselves as retail investors, but that's a different matter. They believe that this space between mutual funds and PMS will become more regulated because of this new asset class. Is it a new asset class? I'm not sure. I would like to call it as a new product class because we don't really know about the risk reward profile of the actual products. So they have allowed for two products as of now. One is called a long short equity fund, and the other is called an inverse ETF. In a long short equity fund, the fund manager can go long on one set of stocks and short another set of stocks, that is bet against the market. In an arbitrage fund, they will usually do that in the same stock, but this is with different stocks, and it can obviously it comes with higher management fees and of course higher risks, because if the calls don't go right, then the fall will be severe. The other product is called the inverse ETF. Again, that is a derivative based, that is a futures contract based product where you bet against the index. Of course, inverse ETF is usually designed for short term holding and short term trading and so on. And so, will this be will the new asset class be useful? I have written about it, so I'm just having a look at my notes here. So it will definitely help the product manufacturers. It will help advisors who charge a fee based on the net worth. Definitely, it will help all of those people because they can introduce these kind of fancy ideas to people who can afford them, or people who think they can afford them. That's a different matter. Will it be useful to investors? It's very debatable. I think most investors are incapable of appreciating simple concepts like asset allocation, diversification, and so on. So I don't think they will, at least the DIY investors will be able to use this new asset class efficiently. It will just be a new form of portfolio clutter, in my opinion. Is this new asset class necessary? It is eminently unnecessary. So, in principle, theoretically, how can you use these products? So, you can use these products to create some kind of hedge to your portfolio because you're betting against the market. So, in case you want to create a portfolio that will safeguard against tail risk, that is tail risk meaning extreme events. They are no longer called black swan events because we have seen them enough. They are no longer black swan, so we should call them extreme events, market crashes and so on. That so it when the market crashes, because you have, for a small portion of the portfolio, you have some exposure to betting against the market, you will that portion of the portfolio will gain, and therefore it will lower portfolio volatility and so on. The long short equity fund usually is sold as a fund that can generate equity like returns at lower volatility. Of course, that assumes that the calls are correct. If the calls go wrong, then it's a problem. So, again, all these products will come with higher management fees and, of course, much higher risks compared to mutual funds. As it is, most mutual fund managers are not able to beat their representative benchmarks consistently. So I don't know how well they will be able to do in this segment, but all the products will obviously be actively managed, uh, in my and also higher fees. Yeah, probably the inverse ETF can be passively done, but they are eminently unnecessary. They like I said, and all you need is to appreciate is, if you have the proper asset allocation and a proper asset allocation schedule, that is to reduce equity exposure, and you do proper rebalancing and stick to that asset allocation schedule, you that is all you need to do to handle risks in the market. I mean, you don't need any of these fancy products. But there are a lot of people who just have this FOMO, always have FOMO, and if, I mean, if they can afford it, they will buy it. They won't worry about whether they need it or not. So for such people, it's a match made in heaven. Where, I mean, the financial industry will be happy to sell such products to such people. I think the more the regulator complicates our life with choices, unnecessary choices, the more we should aim to keep our investment portfolios simple. It's very hard to do for those who are addicted to social media because they have all sorts of opinion. I would strongly discourage considering any of these products. Of course, we don't know what form these products will finally take, but in its present form, as per the consultation paper, I don't think they are necessary.